Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down slightly on the S&P. You can see here 0.15%, pretty much flat. However, Nasdaq is down, I think, more than 1%, but we did see the Russell 2000. I believe Russell 2000 is up almost 2% there. You can see the transport is up about 2%. Also, we did see the leaders continue to get hit this week. So S&P is flat, and that's usually where S&P usually sits. Usually S&P sits right in the middle, right in the middle, and you see usually the Nasdaq and the semi that leads. You can see your year-to-date numbers here, 35%, 37% this year-to-date, Nasdaq and semi. Semi got hit, 3% negative today. Nasdaq almost 2%, S&P flat. We did see Dow up 1%, transport up 2%, Russell 2000 up 2%, banks up about 0.5% there. All the major indices positive year to date. Dow just flipped positive, I believe, this week. If not last Friday, transport flipped positive, I think a week ago or 2 weeks ago. 2 weeks ago, Russell 2000 flipped positive either yesterday or last Friday. Banks were down almost 20% before last week. Just 2 weeks ago, it was negative 20 year to date, maybe even more. Getting pretty close here. We got negative 12% year to date. So we're seeing the rotation occurring here in the market, and I think we desperately needed that. We needed the tech stocks to cool off. They were going too crazy. And what you don't want to see is tech stocks going way too much without cooling off and just pulling entire market down with them when they start coming down. So it's actually good to see this rotation occurring last couple days, letting some of these laggers to catch up. I like to see banks do better, but it's good to see the small caps catching up. Transport making new all-time highs here, and diamond also. And so I think we may continue in this fashion where we see the trend, we see the Nasdaq, we see the semiconductor, them to kind of cool down, let the laggers to catch up a little bit until the market kind of balances itself out. And in that process, this market can continue to prop itself up, right? Instead of, this tech stocks just pulling everything down and we're seeing another huge correction. I think this is a right approach. This is exactly what the long-term buyers want to see. That great rotation occurring. I think it started yesterday. So anyway, let's analyze the S&P here, trying to figure out what we can expect going into tomorrow and remainder of this week. So this is today's price action. This is where it closed yesterday. We did see that gap down. Let's see how much of a gap down it was. It was only about 0.3% gap down, not a huge deal in the morning time. And we saw some fluctuations here, right? And it looks like on the second hour, we breached that micro-term support, came down initially, saw some dip buyers, and I'll tell you why we saw some dip buyers here, because there was a gap that just got filled. I was tweeting things out this morning once that gap got filled. This is a level that we talked about on the last night's video. We talked about the gaps. Our gap is going to provide support. We threw that hammer candle there, right? And then we saw a continuation on the third hour, and we made some attempt to make a move here to the upside on the third hour. We pulled back, and pretty much all throughout the day, it's been kind of stuck on this micro-term resistance there, and pretty much move sideways all day long, kind of all around my short-term moving average there. So that's the micro-term perspective, just kind of what happened today. Let's zoom out a little bit and kind of look at the short-term price action perspective. So this is kind of the short-term price action here. Let's kind of look at last couple weeks here. So you can see in the short-term sense, we're continuing to cultivate higher lows and higher highs here, right? We got these lows, and we got those highs. Continue to cultivate that higher lows and higher highs here. Also, you can see that my midterm moving average is definitely rising. When we have my midterm moving average rising, we want to continue to give benefit of the doubt to the buyers in the midterm. In the short-term sense, you can see in the short to midterm sense, you can see that gap, or short to micro-term, short to micro-term sense, we saw that lower wick here, right, today on the 2nd hour and came down and filled this gap. So yesterday we saw a huge gap up, and then it came down about, we filled about 65, 70% of it, but we had about 30% remaining. That 30% remaining gap was filled today. And once that gap got filled, we saw a little bit of move to the upside there. My short-term moving average is also still rising. Overall sense, we're kind of moving sideways just today, but overall we're moving sideways, and the price been staying above my short-term moving average. You can see here, if I zoom out a little bit, this was when we were in a short-term downtrend. This was what we were analyzing 2 weeks ago before I left entire last week, right? All 2 weeks ago, we were dealing with these lower highs and lower lows. And in that process, we saw this move. My short-term moving average continues to what? Decline. And that's when we're giving benefit of the doubt to the sellers in the short term. And once we saw that my midterm moving average was still declining, we started giving the benefit of the doubt, not really to the sellers. We're more of a neutral stance, you guys remember, in the midterm, because, we'll go back and look at it because we didn't take out that low from back there. We'll zoom out and look at the midterm. But so then, you can see that my short-term moving average was declining, and now what happened? It is now rising. Right? This is what really helps us to gauge, okay, are we in an overall uptrend in the short to midterm? Are we in a downtrend? Because the market doesn't go straight up. It's going to have its ups and downs here, cultivating lows and highs, and that's a higher high. And we're trying to figure out, what we're trying to really figure out since the video yesterday is, where is that going to be? Where is that higher low going to be? Maybe if we zoom out a little more, we get a better idea, right? So now we're looking at the midterm. This is a midterm picture. This is a reason why, we were not giving it totally bearish, despite the fact that we were seeing this downturn 2 weeks ago, because we were never cultivating lower low yet, right? So, we kind of wanted to see how this market is going to play out first before we get into a bearish sentiment or start labeling this market bearish in the midterm. We're more of a neutral, maybe slightly bearish, right? 2 weeks ago when I was analyzing this market, slightly bearish, but mostly neutral in the midterm. Obviously, that has changed ever since we saw that bullish divergence here and started making higher lows, which all happened last week, right? Cleared that downtrend resistance, gapped that up. With all of that happening, we saw my midterm and my short-term moving average skyrocketing to the upside, and the market really thrived to the upside there. Again, in the midterm, we can all agree that this is higher high. You can see that maybe this is high, higher high, higher high, and we got these equal lows there. So if anything, because of those equal lows, we were never in a midterm downtrend. What we can say is we were in a midterm basing period. So market made a big move, back in July, August, and September. It took time to rest in October and, pretty much throughout late September, second half of September, and throughout entire October, right? That's what we can say. In the midterm, market came down, got back up, came down again, kind of moved sideways overall, and now it looks like market is getting ready to resume to the upside there, right? So you can see, even if we can look at this peak right here, and that's definitely a higher high, right? That's not lower low, that's a higher high, that's not equal highs. So we're definitely in that bullish sentiment overall. So what we're trying to figure out right now is, okay, we just feel this gap here. So is this going to be that higher low before this thing getting back up and continue to cultivate higher lows and higher highs? Or is this market going to come down lower, maybe even fill the gap? We got a bigger gap right here at 349, 343 area, right? So this is important pivot, obviously, right here where we're trading right now, 350s and 340s or something like that, because that's the prior pivot, right? And, this is why you kind of have to understand, not only the short term, also you have to understand midterm. Because if you look at this as a bear flag, that doesn't work out very much in a uptrend, in an overall uptrend. You know what I mean? Like, because a lot of times what could happen is in an overall uptrend, you see these moves here. Like, so let's say this is uptrend right here, right? We start getting into uptrend back in late June, you guys remember. So a lot of people can look at this and this is maybe, they thought this is maybe a bear flag. Maybe they thought this was a bear flag. Maybe they thought this was a bear flag. And these are some, steep declines here, steep declines there. And we're talking about back in late June and early July, right? They all look like, bear flag, right? This looks like maybe a bear flag, right? They all kind of look like a little bit of bear flag, right? After this decline. That works in a downtrend, but it doesn't work very well in a uptrend. Like, let's say here, this played out pretty well. That's a bear flag because we're overall in the shorter term sense, at least we got cultivating lower highs and lower lows, and then we threw that bear flag and then we gapped down. It looks like there's another bear flag here, and then we saw a downturn, right? This looks like kind of like a bear flag, but it didn't play out. Because after the bullish divergence we saw here, there was a lot of bullish and momentum with the higher lows there. So you see these bear flags, bull flags, all of these signals, it works better if you understand, the overall trend perspective, right? So this bear flag, I usually wouldn't call that a bear flag just because, we are overall uptrend. And that might play out, you know what I mean? So I think a lot of times when you're trying to trade short term, you're so focused on these short term signals, it's a lot of times you get whipsawed quickly. And you guys know what I'm talking about. So that's why I like to focus more on the long term. You guys know that I'm a position trader and a long-term investor. A lot of my longs that I've accumulated back in March lows, April lows, May lows, I'm still holding a lot of those today. And I also accumulated here, some are here, and here, something like that. I even bought some, shares and underlying securities. Some are here today, even today. And when I get into a position, I'm thinking much long term. So for me, let's say I enter some positions today. If these things are coming down to 349, even 343, that's not a huge deal. I might even think to buy more. And if the spider comes down to fill this gap, I think that's actually even a good buying opportunity. I'm not sure if we're gonna get there. So let's check out the oscillator. Maybe we'll get a little bit of better idea where the market is going tomorrow and remainder this week. So I was kind of looking at this support here. We actually broke through it today, so that support is not going to work out anymore. So it looks like bears actually do have a little bit of more room to move, right? So it looks like if bears really want to utilize this, because bears are not tired. They're not back at the lows here, the bottom of his band, which is an oversold vicinity, right? The top of the band is the overbought level where buyers get tired. And that's kind of what happened here. We saw a big gap up, but buyers got tired. So if bears want to take advantage of this and push it down, I think they can bring it down to 349, even trying to fill this gap. But what can happen is if you let buyers hang around too long here somewhere, let them make a move sideways here too long, what they can do is they can do as the price moves sideways, you could see this oscillator kind of coming down, hitting the overbought level, or oversold level, and then bulls bring it up. We've seen something like that happening before. That's what I like to call, market correcting through time instead of price. They actually corrected. That's really not a correction because it gapped up first. So basically, it just we went up, came back down. Correction would be actually coming down right? Making a correction, a move after a move. This was like a gap up and come down, so it's almost like a non-event, even though it is not non-event because there's a cultivation. We cultivated higher highs, so it's really not a non-event because we did cultivate something because of gap up. But that's why it's better to see a gap up and the fade rather than just fading right down right. You know what I mean? So even though we're seeing some pullback here and we see a lot of bearishness entire today, we looks like we've been grinding higher. So at this point, it's kind of 50-50. What's going to happen going into tomorrow? If the buyers continue to find support at 352, because we are elevated. So if you let the buyers hang around too long, you will see them trying to make a run to the upside, especially after they get fully rested. So if the bears don't take advantage of this quickly as possible, at least next couple days, probably tomorrow, early hours of tomorrow, I expect bulls are trying to get it back up. So 352, 349 is a level of support to watch tomorrow. I'll come back for you guys tomorrow night. We'll re-examine. We'll know a little bit more where the market is going. You guys have a wonderful evening and good luck trading tomorrow.